Okay guys, so in this video I'm going to be talking about the different types of strategies we need to know about, what strategy we will be using, and most importantly, what's the concept behind our strategy. Okay, so firstly, jumping into the different types of strategies we need to know about, the only two really and truly we need to be aware of is, of course, our own strategy, smart money concepts, and secondly, the retail strategy. So you may be asking, what's the retail strategy? It's a strategy which is profoundly used by many traders. Statistics show that it's used by 80 to 90% of traders. But then you may be asking, Cavs, why don't we use this strategy? Because it's used by so many traders. For that same reason, we don't use the strategy. It's used by so many traders, so therefore it's very manipulated. Alright, the markets use these people that trade the strategy as liquidity. Of course, liquidity being something that we're going to go over further in the videos, in the later videos. But briefly talking about that, because so many people are trading the strategy, it's easier for you to get trapped, easier for you to take losses. So for that reason, the win rate on the strategy is not the greatest, and of course your risk to reward on this strategy is not the greatest, because a lot of retail traders tend to use big stop losses. Okay, they use 30-40 pip stop losses. So by the time, of course, your move hits take profit level, it might take days, it might even take weeks, or a lot of the time probably hit stop loss because it's so manipulated. Right, so we use these. We need to know about this strategy. Why? Because we use this as liquidity. We use this as fuel for us. So we know once these traders are taken out, we can then enter the markets with smart money. So now we jump into our concept of smart money concepts. Okay, and further talking about smart money. So you may be asking, who are smart money? What is smart money? Smart money is your big institutions, your big banks, investors, right? Your big traders with a lot of capital that of course trade within the forex market. You have to remember, again, the forex industry is an industry that has $7 trillion traded daily. Okay, so for that sort of capital, you need big investors like your banks, institutions, and of course your investors to of course move the markets, to put in this sort of money. And you have to also understand that the markets don't just move where they want to go. The markets have a purpose of moving there. Where does this purpose come from? Well, of course, it's all been manipulated by your smart money. These are the people that manipulate the market to go where it wants to go, right? So for that reason, our strategy teaches you how to join them when they trade, how to know when they've entered the markets so you can enter the markets with them. Of course, our strategy is also much more profitable because we are not too focused on our win rate. Our win rate is not the greatest, however, it's not the worst. We are more based on risk to reward. So our win rate can be 40%, 50%. However, we're still very profitable. Why? Because we are more focused on our risk to reward. So we might take a trade and risk 1%, but our risk to reward minimum will be 5. Okay, so it will be a 1 to 5. So if we invest 1k into the markets, we'll only be losing out on 1, and if our trade does take profit, we'll be gaining 5%, 5k that is. Okay, however, with your retail strategies, it's more a 1-to-1. So 1k loss for 1k win, or 1 to 2, 1k loss for 2k win. So firstly, our strategy is more profitable. Okay, we catch bigger moves because we are entering the markets with your huge investors, your banks, institutions, etc. And you also, guys, you have to remember, these people have crazy capital. Like, when I mean crazy capital, I mean billions and billions and billions. Okay, so if they was to take a loss on the trade, they will be losing crazy amounts. So you have to remember, these banks, institutions, smart money will avoid getting themselves into a loss. They won't take losing trades because they can't afford it. And regardless of they can't afford it, they can afford avoiding themselves from taking losses because they have so much capital, because they have so much power within the markets. Okay, hope that makes sense, guys. Of course, we'll be further indulging into our strategy and the different types of strategies we need to know about within the next video.